Welcome to this live intraday strategy webinar. Today is Thursday, March 9th. We are heading into the ECB. Mario Draghi just taking the stage. They held interest rates as expected earlier today, guys. No change, but we are looking to see what the commentary yields. So a little bit more of a cautionary stance. The central bank citing that we're going to be holding on to interest rates at or below these levels for quite some time as they look to see whether the underlying inflationary picture is in fact picking up. So we'll give you highlights of the ECB as the wires cross. Again, I do apologize for the sound issues earlier. If I could just get a confirmation, guys, that we're good. Pete says we're all good on the sound. We should be good to go now. Okay, Graham, thank you for that. I apologize again for the delay. I started talking too early. So obviously, we're going to go over all the euro crosses as Mario Draghi continues his commentary here. Euro dollar, euro yen, euro kiwi, and euro Oz are all on the menu. Tomorrow's non-farm payrolls, so obviously all the dollar crosses will be covered today. Sterling, kiwi, yen, and CAD, which is just insane. Dollar CAD's ripping beyond belief. That thing does not want to find resistance. We'll touch base on Aussie CAD real quick, which was updated last night. And then obviously the Aussie key, I just want to kind of highlight that key range as well. As far as the commodities are concerned, crude oil is making a whole lot of hassle, still coming off key resistance as we had noted on the weekly charts, that critical weekly level for crude offering some kickback here. So we'll touch back on crude and a quick reference on gold as well. That's on the menu on my side, guys. Any questions or trade setups you want to review, as always, feel free to throw them on the message board. And again, I'm going to continue to monitor the wires here as Mario Draghi continues his commentary. Says underlying inflationary pressures remain subdued. ECB will look through transient inflation changes. Very substantial degree of accommodation is needed. Inflation increased due to energy effects. It says sentiment indicators point to a pickup in momentum. Pass-through of policy supports the credit, and ECB measures preserve favorable conditions, or the ECB measures are to preserve favorable conditions if needed. QE can be expanded, extended if outlook worsens. These are all things that they're going to favor kind of a little bit more of a cautionary approach. If we take a quick reference back to euro, it's still coming off a little bit, guys. Remember key support from last night, 105.26. We'll go over this in just a moment, but I do want to touch base real quick on the dollar index. So before we get started, I just wanted to highlight, look, we're at the same exact key region. The opening range high for the month still remains resistance. It's still a constructive trade above 101.76 for resistance on the upside. Watch that median line. I'm not really stressing it. More so that 102.50 mark is the next upside target here in the index if we do break. I do want to notice a couple of things in momentum. Again, this is going to be an inverse chart of the euro, so you'll see some movement in this today. But some divergence that we've been seeing both along the reference points of the last 2 weeks, okay, but more importantly, just near term, price action pushed into that new high, failed to make a new high in momentum, and then you got a 3-point trigger break to the downside. So the momentum signature looks vulnerable for sure. Doesn't turn into a bearish trade, but certainly leaves it vulnerable for a pullback. Topside break, again, you're looking for 102.50 on that. So just a quick update on the dollar index levels. I'll give you an update on this definitely in tonight's report as we go into the NFP tomorrow. But just watch the monthly highs here. If we clear it, 102.50, 102.75, 102.74, this region would be the next topside targets you'd look for on the index heading into NFPs. A downside break below 101.76 really puts me on the sidelines. Those are the highs that we made back from February here, the February opening range high, but also that, it's a 618 line that has offered some decent pivots on the rally off the lows. So I do want to just keep that in mind. And below that, you're basically looking for a drop back into the weekly open, into the monthly open, which is also the lower parallel. So risk is for a pullback. Watch 101.76 on a topside break, 102.50 and 102.75. Any questions on the dollar index? I don't want to spend too much time on this because none of the levels have changed, but the idea still remains the same heading into the NFP, and obviously Draghi is going to continue his commentary here, which is going to push this around. All right, looks like that pullback is materializing pretty quick. Okay, that's on some rebound here in the euro. Draghi says risk the economic outlook remain tilted to the downside. Again, more easing. See the euro here Jump right back into the euro dollar, coming off support last night at 102, 105.26. So this is the level that we had talked about in yesterday's piece. Let's jump into the euro crosses. We'll come back to euro CAD in a little bit. Here's the update from last night. Okay, 102, 105.26, 105.27. You had a nice confluence there of a 618 longer term retracement and a 786 just from last week's low. Add to that, at the juncture of where it hit, you had that parallel, the 50 line coming down, which caught that nice confluence region there, a little ahead of schedule. So you're getting a nice little pop back. Here's the monthly open as resistance right now at 105.76. You got a clear-cut range that you're going to look for the break here heading into the close of the ECB commentary. It's either going to be that topside pop back above the monthly open. I would like to use this kind of as a launching point. Break once a bunch, the weekly open gets us back on track, for a little bit more of a substantiated rally. Remember where euro's coming from. Okay, we held 40 in momentum. At the end of the day, you're still in this downslope. Once we clear this region, which is this, you're basically on your way for a near-term breakout trade, okay, and a recovery in the euro. So the possibility is definitely there. We're looking for that turn in the dollar as well. Could be the play. I'd caution everyone ahead of NFPs, just because we got a ridiculous number yesterday with the ADP print, and you know the variable nature of it is always going to be an interesting trade. So let's just say keep the trade sizes light heading into the release, and then we'll have to see if we get a knee-jerk reaction on NFPs tomorrow. Might be a great fade opportunity for the dollar. So keep this level in mind for the euro dollar heading into ECB here, into the close of the commentary from Mario. 105.76, 105.77, that monthly open, and then that key support that we highlighted last night at 105.26. Questions on the euro? Draghi says economic risks less pronounced, but still tilted to the downside. Underlying inflationary pressures continue to be subdued. We heard that one. They seem to have raised, their 2017 and 2018 inflation forecasts. Keep 2019 at 1.7%. Projections conditional on policy implementation. All right, this is going to be fluff for the next couple of minutes of commentary. It's usually where they just go over how variable they are and able to adjust policy if needed, core inflation to rise gradually over the medium term, okay, yada, yada, yada. We'll keep you updated on anything important that crosses, but as it stands right now, key support here at 105.26 for euro. Okay, let's jump right on. Euro yen was number 3, let's give me number 3 for today, but number 2 from last night. Here's euro yen. And here's what it looked like last night. Whoops. Okay, so the opening range is still very clean. We're looking for a break of this opening range. The risk still remains as you hold 121.16 here, but that's still the breakout level. I don't like that it pulled back in, and I don't like that you're getting divergence right now on that high. But the condition stands the same, guys. We've been in this formation for weeks, if not months. What is this, off the highs from December? It's very clean, the lower parallels. While they don't actually reach, you can see if you take a parallel off that, perfect touch. Okay, so the formation seems good. You got a nice pivot off the 50 line. I want to basically look for confirmation whether this is the real deal or not. It could just be a break of the upper parallel, test as support, and then move off. That puts the impetus on this, the weekly open, which converges on that former upper parallel. That caught the highs literally to start off the week and Friday. It was the opening range high for the week and Friday's high in that little pocket. So I don't really want to judge this right now. I want to sit out the ECB press conference. It's a yen cross, so the abomination standards will always hold steady here. Okay, just to put a little bit more color on this, it's 3-point trendline support. Again, even in time. But you get the picture, okay? If the breakout is legit, you want to see support hold around here. Topside targets 121.60, 121.85. I wouldn't really worry about the 121.60 as much as this. This is the 618 of the entire decline. Okay, some swing lows there at 121.60. But we'll see. And with what dollar yen did yesterday, it obviously made a clear break. We talked about that in the webinar, the weekly opening range. So that thing is still kind of giving us some upside there. If the yen weakness continues, it could be a nice little rebound. But at the end of the day, right now, you're looking for the pullback to see if this materializes into support right around that 20 level. 120.70 level, 120.69. Weekly opens right there. That is euro yen probing into critical resistance here. See what happens. Draghi says all euro area countries must step up efforts. Structural reforms must be stepped up substantially. Urges policy actors to contribute more decisively. ECB measures support borrowing conditions significantly, and the projections are conditional, again, on policy implementation. All right. Well, we'll let the fundy guys have a ball with that and come up with a whole storyline, but as far as price action is concerned, markets don't seem too impressed just yet. Questions on euro yen? Once, twice, sold. Here we go into euro kiwi. Here's what euro kiwi looked like last night. Okay, as I said on the upside for euro kiwi, what can we say about euro kiwi at this point? All these trades, guys, that pushed into resistance last night, I'm not buying the breakout because a lot of them are pulling right back, and they're coming into critical levels. So the whole premise of the euro kiwi, look for this as sort of an offset. If you're holding long exposure in the euro, this was my favorite one to possibly see a little bit of a pullback. Again, I'm not trying to call a low in kiwi, but it's at a big resistance level. If it's going to happen, this is where you'd want to see it. You got the 200-day moving average. You got the 2017 opening range high. You got slope resistance all lined up in this region here on the back of what? A six-day rally? I mean, it's ridiculous at this point. Now, it's an overbought condition. That's in no means a reason to get bearish. That could stay there for the next month and a half, and this thing could be at 55.80 before we know it. But I'm still starting to think you look for exhaustion here. And I kind of feel like a broken record, and I've missed a lot of trade opportunities this week based on me looking for resistance on some of these stretches that never seem to materialize. That being said, sorry about that. That being said, oh, what was that? Oh, Euro Oz. We'll talk about this later. That being said, at the end of the day, sub the opening range high that we made in the first day of trade here for the year, comes in at 52.78, 52.80. You're still at risk for a pullback in euro key by my estimation. Here's what the intraday chart looks like. You're starting to get that kickback now. If you're not on the short side already, wait for the presser to clear. If you get a pullback towards 52.80 again, that's the level to be, is that 52.79, 52.80. We scratched 53.10, which was actually a target from last night, but as I said, I didn't really want to stress that as much as the upper parallel. You're getting that reversal now, momentum back below 70. Watch out. Okay, just watch out. We might get that washout. Key support or initial support, look for that 50 line, 52.40. 51.95 is just an 88.6, which is not what I'm stressing. It's really that pivot high. Critical support, bullish invalidation, 51.18, 51.20. Now, broadly speaking, I do like to trade higher. No one's saying anything. It's just that it's vulnerable here. I wouldn't want to get caught trying to buy this at this region. And I said that all week, and there's just no pullback, guys. And it's not about knowing directional bias, as I say a million times. It's about the trade setup. And while you might have made money chasing this, I can't justify that kind of behavior. So here we are looking for the pullback. Questions on Euro Key? Very clean from a near-term structural standpoint. Okay, so we probed right through here. We tapped 53.10, a little love tap there and a pull right back. See if we can't get that play with a break back below the overnight lows. Okay, here come the commentary from, this is the interesting part. Here comes the commentary from, some of the analysts, some of the banks, some of the, commentary that's not from the ECB, and their interpretation of what the ECB is saying is that the ECB bumps up growth and inflation forecast but retains a cautionary approach, Okay. Pretty much right in line with what we expected. So that's Euro Key. Any questions on Euro Key before we move off? Number 4. Number 5, Euro Aussie, right into resistance, and that's the one that we just kind of tapped on right now. Here's what Euro Aus looked like last night. And as I said on this rally, look for a break of the weekly opening range. Initial targets were 140.44, but really it's 140.74 that was the level I'd be more focused on as resistance. Big pivot in price. It's also a level that has offered some really, really nice turns. Here's what it looks like now, Euro Aussie. And that's kind of where we sat. There's that 140.74 level. It probed as high as 141 basically, but on a closed basis, you can see on this 2-hour chart, it actually was a perfect hold right there and pull back. So same exact deal, same exact deal. Now it doesn't bode so well. I'm not really looking for too much crazy strength in Aussie dollar, which we'll look in a moment. But same type of deal here. Risk for a little bit of a pullback. You got divergence on the highs, not as apparent on the near-term highs as it were on Euro Key there, but certainly same type of gig here. Okay, weekly opens not too far off, 39.76. Broader trade still remains constructive above the median line, which has been super clean in this. Okay, in fact, if you take a parallel of this trade right there off this high, that parallel caught the overnight high is pretty damn nice too. Okay, which gives us further conviction on slope. And that's going to highlight this lower parallel as bullish invalidation. We'll just leave this here for color. Again, not a target or anything. I'm looking to stay constructive above the median line. A topside break beyond here, 41.73 is what I'd be looking at, a basic 50 of the high from December. Questions on Euro Aus. Very similar setup on the Euro crosses, but they look very clean. Again, from a structural standpoint, the levels played out pretty well. So in fact, we could just clean this up for you real quick. We don't need that 38.2 in there anymore. Less is better. Keep the opening range high, near-term support. There you go. And in fact, we do need to adjust this retracement as well. Yeah, that puts the 50% exactly where we were looking at. And your bullish invalidation at the 38.2. Beautiful. Beautiful. There you go. I'd be looking for another push high, guys. I wouldn't start fading this just yet. I think you could probably get another stretch into 40.74. Once the ECB clears out, we get Mario Draghi done. Everyone knows nothing new is going to happen. Nothing new commentary is going to pop out. You might see traders kind of drive this higher, and that's where you look for failure against that last high. If it breaks, sayonara, 41.73. But I'm still looking for exhaustion against that high. Euro Aus. Boom, boom, boom. Let's jump into the dollar crosses. Any questions on any of the Euro crosses or anything from Mario? Super Mario didn't really have anything for us today. He's still going, guys, so I'm not going to monitor this. There's not really anything new coming out. It says balance of risk to growth has improved. ECB removed reference to use all instruments. Okay. It says recognition that balance of risks has improved. Present policy stance is appropriate. The Council acknowledged success of the ECB policy. So basically they're talking about the fact that from the commentary it was removed that any and all instruments are at their disposal. Basically they said they can extend or increase asset purchases, but they removed the any and all instruments. No discussion about having another LTRO. Long-term refinancing operation, guys. That's the LTRO. They did that a couple of years back. Removed reference to signal sense of urgency gone. ECB removed reference to signal sense of urgency is gone. Futures extend losses after Draghi comment on growth to risks. So that's the drive up. Okay, we were just talking about this. And here's traders driving Euro back into the highs. Go back to Euro dollar. That's probably at the highs right now. And here we go. Okay, so that's all it took. That's all it took. is that traders noticed the omission of this really urgent sense that they had that we can use all measures, that we were ready and standing pat, more so taking a little bit more of a complacent view. They still remain pretty cautionary. Interesting. Okay. Near term, look at that upper parallel and the weekly open. That's your breakout zone. That's your breakout zone. Now, the weekly opening range high is way up here at 106.40. I wouldn't want to necessarily wait for that to call it a breakout. But just based on the nature of the slope that we've been in, the weekly open. Also, I don't want to get too crazy with this, but if you zoom this chart out, guys, do you see this line right here? I'll show you on the daily chart. This is the actual median line. That's this in blue. And they all converge still right there at the weekly open. So like, just keep that in mind. Okay, that's the break. And also, if it's way too early in this session, we haven't even opened, but something to think about tonight. If we do post or close anywhere near where we are right now, this would be an outside day reversal off a 618 support. That's not something I also want to ignore. Keep in mind the near-term charts that we highlighted yesterday also highlighted a 786, so there's lots of fib significance there, as well as the 50 line for the current operative slope. So this would be an objective breakout on a move, specifically northbound of 106.20. Okay, let's jump into the dollar crosses. We good with the euros and the euro cross? Here's what we're looking at heading into tomorrow's non-farm payroll report. As we look into the economic docket, non-farm payrolls are expected to come in at 227,000. Last month we got a print of 200, or excuse me, exact opposite. Last month we got a print of 227,000. We're expecting a print of 200 this month. Unemployment is expected to downtick from 4.8 to 4.7. As always, watch the labor force participation rate. We got an uptick last month to 62.9. So certainly if that holds and you see unemployment downtick, or specifically if that increases, that's actually a really good development for the labor markets. As we've always said, there's structural deficiency now, right? Unemployment looks really decorative and you could hang it on your Christmas tree at 4.7%, but when you look at the broader labor force participation rate, it's actually still at levels we haven't seen since the 1980s. Okay, so the broader population, as far as the percentage that are employed or that are in the labor markets, let's call it, is still pretty low. So that's on tap tomorrow morning at 8:30. We'll keep you updated on SB Squawk as far as that's concerned. Watch this euro close today. Again, specifically as we head into near-term resistance. Moving right along. Hope I'm not going too fast for you guys. Sterling dollar. Here's what British pound looks like to close out the week. She's a creeper, okay? And we've been talking about this near-term channel since Sunday. I don't know. Looks like a near-term break to me, okay? I don't want to get too excited about it just yet, just because the dollar is still really teetering on that resistance. But, you know, it could be the turn that we've been looking for as far as a near-term recovery. Now, near-term targets, 122.10, and you're still going to have to respect this 122.60 region. I know it didn't really give us too much play here, but it now converges on the lower parallel. So that'd be the first place you'd look for a break to legitimize this being sort of a false break scenario. You can kind of trash or take that to the lows for now. Oh, I'm so sorry, guys. There's a 786 retracement there I did not even have on the chart. Boom. Well, there you go. Beautiful then. Okay, so there is a ratio here to the decline. There is some significance. You look for that break above 122, which is, again, yesterday's high, that 100% extension, and that 2260 level would be the recovery sort of to invalidate this break below support. Remember what it looks like on the daily. So that means if we get northbound again of 2260, you'd start to think, okay, you know, they just wanted to wash everyone out. We're good. But until you clear 2260, just to put this on the table, this is a bearish trade any way you slice it. You have to clear 2260 just on the near term, on the basis of where price is. in my humble opinion, to get this thing going. But as far as the immediate risk, I do think it's higher. Questions on sterling? Levels unchanged. Just add that 121.40 level, that 786 retracement. Really perfect touch there of the lows yesterday. By the way, here's what we looked like on euro sterling, or on sterling, excuse me, a couple days back. So just add that 21.40 and you'll be good. All right. That is Aussie. Number 6. Number 7 is going to be Kiwi dollar. The most frustrating of the trades for me, at least, this week. Look, nothing's changed on this since yesterday. I don't even want to spend too much time on it. I still wanted to see a drop little bit lower down towards 68.60, maybe 68.84, just to match the yearly lows. Once we wanted this thing to hold support, it didn't. Now we want it to sink a little bit lower, and it won't. So I'm kind of throwing my hands up with this one. I'm really kind of just focused on the Kiwi crosses. I think you got a better shot with Euro, Kiwi, or even Aussie Key on trying to play a rebound in this thing. It's just the dollar doesn't want to sink at all. So look, 68.60, 68.84 are still two levels of support. I would be interested in looking for some sort of reaction to try to fade this from here. I think you're just chasing it. Even if you do get a dollar pullback, I don't like that it's not basing off of any technical level. It's just kind of free floating, just above the yearly low. I guess we can just add this to the scalp chart, but you didn't even make a touch of the yearly lows yet. So levels remain unchanged. Your risk for a rebound while below, or your risk for a rebound if we do finally get a dip into here. I'm only looking to play into like 69.50. You're looking to initiate a new short. This is the median line extending off the high. It's basically this pocket region right here. And then you'd be on your merry way. Again, if this is wave 3 of a simple 5-wave decline, you don't want to misjudge this. This could keep going. And this is why I'm not going to really try to fade this pair, even on dollar weakness, like I said, until we get anywhere near 68.60, 68.80. Questions on Kiwi? And that is number 7, nice and quick. Kiwi dollar. Look to see if we can fade, or look to see if we can get that last final thrust lower into that pocket region. Dollar yen. Who's the dollar yen lover in here? Graham, is that you or is it Pete? Here's what the abomination looks like. I hope you're not getting chopped up, because near term, if you put this into like a 5 or 15-minute chart, it's really, really all over the place. Look. The only thing I liked was this. It was an objective break of the weekly opening range. This is a 30-minute chart. Here's your weekly open. Doesn't get much cleaner than that. You put a Monday stretch, Tuesday high, Tuesday, Wednesday failure, break. You're looking for a late week high. It's pretty late in the week. It's Thursday. We can get another high into Friday. I'm looking for 115.10 to complete a basic 50% retracement, but momentum has been pretty heavy. Okay? On the top side here. So you could get a little bit minor of a pullback. Again, you want to stay kind of constructive above this formation. Bring it back into that 120-minute chart, give you a little clearer view. Okay, this pitchfork has been pretty clean. We talked about this earlier in the week, right? Boom, boom. 50 line, got a little dribble there. It actually completed a decent retracement, 38.2. Okay, put that back on there for you. Whoops. So that kind of bounce there. You got another bounce there. Weekly opening range break. You look for the high. This is like kind of your basic trade setup. So it actually ended up being pretty clean. The only thing is, if you didn't catch that pullback, this was the only pullback that you got. This is kind of already in divergent territory as far as momentum. Tomorrow's NFPs, 114.15. Dollar yen is typically a strong reactor to U.S. data. So a drop into this would be an interesting move, okay, heading into tomorrow. You stay constructive on the broader trade. You have to while above the weekly lows, obviously. But 115, depending on where we are in time, the median line would be your next topside objectives. Key resistance on this is 115.90 to 116. Huge pivot in price. 618 retracement of the decline. Again, and depending on where we are in time, the median line converges on there basically into the start of next week. So that's kind of where I'm at with dollar yen. I think he stayed constructive above the weekly lows here, broadly speaking, looking for those pullbacks to get back on the long side. And this is one that could buck dollar pullback, especially if you see risk really start to tumble over. Questions on dollar yen? It's number 8. BOJ is also on tap, so you have the NFPs on Friday, BOJ next week on the same day as NFPs in a 24-hour block, guys. You'll get the the FOMC. So you get the Fed and the BOJ within a 24-hour block. So there's going to be a lot of volatility to work with on dollar yen next week, and we'll definitely be poised for that volatility. All right, dollar CAD. She's a ripper. Here's the loonie. Where art thou, loonie? There we go. But if you're not sick of hearing me say it, still thinking you want to be cautious here. The last level that I was looking at for final ditch resistance was right here at this confluence. We blew through it. So as far as dollar CAD is concerned, I'll put an update out tonight, but this thing, I can't really do anything with it. You can't get back on the long side here. Trying to fade it, even with the momentum signature as it is, it's the strongest one. And in fact, just to give you kind of a point of reference, aside from dollar yen, here's the performance looks like versus the dollar just since last week. Here's a 5-day. Okay, down 0.86%. Obviously, Kiwis is in a league of its own this week, but you could see the com block is just, especially CAD and Kiwi, really, really weak. So as far as trying to chase the dollar CAD as one of the weakest performers on the back of this stretch, today's close is kind of being important. I'm looking at this median line right here, guys. It's the same slope that we were following all last year. You have 1, 2 decent touches. It caught resistance here early in January. Today's close, if we do close above it, would keep you looking higher, but how do you trade it? I don't know. You can't just chase this thing. So a pullback, where would I start to look for some support is now what you want to focus on. Obviously, an ideal scenario would be right at the former weekly opening range highs, which converge on this. That puts you somewhere around like 34.30 into 34.50, this region. That's a big feat. You haven't gotten a pullback since the origin of the advance. So it's sort of maybe too much to ask for, but that's the initial area I'd start to look for some support on, possibly a move higher in dollar CAD. So my least favorite, I just wanted to bring it up because tomorrow is your double whammy Friday. You have CAD labor numbers as well as unemployment or the NFP numbers for the United States, both coming out at 8:30 Eastern exactly. So you can imagine a scenario, again, like I always say, where there's a disparity between the two on either side, really could see a strong reaction in dollar CAD. So in the scenario where you get a strong CAD number, maybe a weak dollar number, it might be a perfect scenario for a washout of the long positions here on dollar CAD, especially as this thing probes into fresh yearly highs. Questions on dollar CAD? Fade 35.75. If we get into 35.75, I'd certainly be looking for exhaustion. Near term, Pete, on an intraday, maybe even intra-week position. Obviously, a 35.75 break on a closed position, I don't even need to point out the previous highs, would be end game scenario for the loonie. But yeah, you have former highs there. It's a long-term 50% retracement of the entire 2016 range. You bet If we get a spike, especially tomorrow, Pete, if you were to get some dollar strength that spikes into this region, I'd be looking for exhaustion right off the bat. Yeah, I'm with you on that one. Yep, you're more than welcome, sir. So the monster known as the Looney. Any questions on that? Number 9 for the day. I want to just take a segue real quick into Aussie CAD to go over what we talked about in yesterday's update at an interesting juncture as well, and specifically with Aussie CAD. I just wanted to highlight a very clean weekly opening range. This is not an operative trade I'm really in right now or actually kind of monitoring, but I do think it's going to be a nice opportunity once you approach either 101.20 on the south side or 102.36 or thereabouts, basically the yearly high, that 786 retracement. This is a key focal range right now. Heading into sort of the end of the week, you know, you're still preserving the weekly opening range. You dribbled a little bit lower and overnight, but again, it's really above that 101.10, 101.20 region. That's still really your critical area of key support here in Aussie CAD. So to look at I know it's an interesting pair, but sometimes when this pair gets clean, guys, it stays with us for a while. We'll follow it for like weeks and it'll just continue to pan out. So again, the daily chart, just a quick reference, very clean within the confines of this formation. Again, that caught the lows on 3 different reference points. A little messy on the median line here, but there's that 50 line converging on basic trendline support and a whole host of fibs. Basic 236, swing highs from back of August of last year. The lows and the opening range low for this month all stack up right here. So objectively, if you see a break south side of 101.10, 101.05 here, you look for the correction. At the same point, if you get a dip into this region, okay, and you get some exhaustion, this might be sort of a nice near-term recovery from a scalping standpoint. The point is, this is your pivot. Below it's bearish, above it, you want to stay on the constructive side of the trade. So from an intraday trade, you want to use the weekly opening range as a tell. And since the weekly opening range is positioned so close to where that support is, you look for a break of this range right here. Downside break, 100 spot 65, 100 spot 21. Key support gets you all the way down to 99.50, 99.57. If this holds, topside break of the weekly open, you're looking right back towards 102.36, 102.58, really close targets here. But key resistance is all the way up here at 103. So I like the targets and where you are in reference to where the targets are. Right now, it's kind of a waiting game. Look for that drop or reaction down near 101.10, 101.20, and we'll look to assess, you know, whether that downside break really materializes into larger correction for Aussie CAD. A nice sneaky way to play CAD strength in the reluctance of dollar CAD to give us a pullback. So kind of lines up with our Aussie outlook as well. We'll see if we can't get this pull sub 101.10. Okay, questions on Aussie CAD. Number 10. Quick reference, not really much to update as far as Aussie Kiwi is concerned, but it is something that we covered earlier in the week, so I kind of wanted just to give you an update on where we are there. Aussie Kiwi was looking really interesting early in the week as we came into a critical resistance zone. It's just been hovering right below that zone. It's 101.15. Here's what the daily chart looks like. Here's what we looked like earlier in the week. Okay, there's your daily resistance. Literally, we called this right as it was happening. 109.15 represents a key 618 retracement from the entire decline off last year's high. And the slope of influence, again, I won't bore you. We went over this at length. By the way, a quick apology. Brain fart yesterday. I completely forgot to record the session. So if you didn't see that posted on Daily FX, I apologize about that. We are recording today for sure. So this will be up shortly after we're done. But the slope of influence that we talked about yesterday, the slope originating off the 2014 lows, January, right here, is still in reference. Okay, we added that parallel from that swing low in December of 2015, which also caught some highs, converged on that region. and we were looking for the pullback. You got a decent pullback play. It's recovered back sort of into a near-term range, but the same risk remains. And another sneaky way to play a Kiwi rebound without having to mess with the dollar, at the same time maintaining a broader Aussie kind of weaker downside approach. So listen, you're right up against the bearish invalidation level for the near-term bias. If you crack 109.15, forget about it. Sayonara. Look for much higher breakout. I don't really have any targets until like 110.76. You got to go way back in price. You don't even have many pivots. I could probably throw one at 197. Just throw that there. $1,975 there. But you're really looking for a much more extended rally. Again, the slope of influence on that daily chart. Every time we've compromised this slope or we've come against it, it's been a strong rebound or just a disastrous break in one direction or the next. It's not many times we're going to sit there and kind of, love it, break it to the upside, break it to the downside, break it to the upside. It's really, the slope has been pretty rock solid. So again, this is your bearish invalidation level for the near term sort of pullback play. If it breaks through, the broader constructive trade that you're looking at right here is what you're focused on. Okay, 110.76 being the next major topside target. Questions on Aussie Key? D, no worries. I have it recorded today. I was just apologizing to the crowd here about yesterday. It'll be recorded today, so don't worry if you're late. I'll have this up. Something to watch heading into in some event risk, especially with what markets are doing in the risk assets. So here's what the near-term chart looks like. I kind of zoom out, see the 4 hour just to get the broader scope of that formation. But you could see real tight consolidation, huge turnover in those rounded highs in momentum. Still think you risk a little bit more of a setback here. Now, once you get a decent downside break, by the way, just jump on this retracement. Let me just add that in, and you'll see when you do that. Basic 236 comes right in line with that 50% retracement. So all of that lines up with the weekly opening range low and the weekly open. It gives you a range of 107. Basically, let's call it 108 into 107.86, this region right here. And that's just a basic near-term target against the highs here if we are going to pull back. Okay, too soon to tell whether this retracement is in play because I don't know that this is a high just yet. But those would be just a little reference tool there that would highlight, kind of the same exact targets we're looking at. Questions on Aussie Key. Still a beauty as far as the levels are concerned. And that's number 11. All right, let's take a quick segue here into crude. And everyone's talking about, oh my God, 5% drop in crude. Guys, still a critical resistance. As everyone was getting excited calling 60 bucks in crude, we were still talking about 55, 54.74. And if you're not sick of this chart, make yourself sick of this chart because it would have made you a lot of money over the last course of the last 2 days just off that reference of 55, which has still been the marker that has been just rock solid technical support. It's the 618 extension from the advance off the lows. It's the 786 retracement from the decline off the range, the entire decline off the 2015 highs. This is a weekly chart. And it's the upper median line parallel for the formation we've been following for the last 2 years. So sub 55, there was no reason to ever get really excited on this trade. Now, typically these consolidations are continuation, as I usually will say, but it doesn't diminish the technical significance of this key region. So, long story short, the pullback played out, and not only that, the break here is an invalidation of the yearly opening range now. So here's your January lows. You're pushing through. I do have a soft target at the high day close that you made, or the high week close, excuse me, that you made here in October, which was a decent pivot. I don't want to stress that now, but what I do want to add is this retracement, because now you have merits of a near-term high. And that 236 comes in at 48.16, just lower. the 52-day moving average. So let's do this. So for those of you crew traders out there right now, this is what you're paying attention to on the near term, okay? Is that 48 region into 47.40, let's call it. 52-day moving average, which has been a very nice pivot in price. Obviously, we haven't touched this moving average since back here in November, but it has been a very nice touch over the last couple, basically over 2016, and a basic 236, nothing fancy. Now, we were talking about the divergence that it was making in momentum as well. I just wanted to highlight the spillover here. Hasn't really given out a basic trigger yet, but I just wanted to highlight this as another reason to kind of curb your appetite. Remember, when we're talking about these triggers, this only matters when the candle closes. So until this weekly candle closes, I can't designate that as a trigger break. Just a moment of caution, okay? And again, taking your low in price, not your low in the oscillator, gives us a little bit more of a shallow approach. Okay, again, you can see a scenario where dollar pulls off, or excuse me, dollar surges rather tomorrow before it pulls off on NFPs. You get that final spike, and then you get a pullback, which may invalidate this as break. Long story short, something to look at tomorrow. Big picture on crude. Here's what the daily chart looks like. The daily chart has a very interesting level of support just on a little bit more of a near-term reference. Here's a retracement from the advance off the lows that you made just from August, okay? And the only reason I use that low is because it was a huge pivot from the initial advance off the year. Here's your 2015, or your 2016 open, excuse me. That was your break of your 2016 opening range. That was the last pivot, and this was the last kind of drive. So this retracement puts a basic 38.2, again, where we are right now. Also a 50% from the advance off the November low. Also the 200-day moving average right here. So on the near term, as we get more granular, watch 48.70, okay? This could be a little bit of a bounce next couple of hours, or maybe even a day of recovery back towards 51, which was last month's low, the June highs, the October highs, or the October high day close, excuse me, or high close. So this is kind of your key range right now for crude, okay, with a broader risk still weighted for a move if we do break below 48.70 down to that lower parallel, down to those regions that we were talking about back on the weekly chart. Okay, so respect the bounce here at 48.70 near term. Here's what it looks like on the intraday. I don't want to stress this pitchfork. Okay, this is a 240-minute chart, but what I did want to look at, I was looking at this earlier today, if you take that slope right off the highs, you know, pretty darn clean. 1, 2, 3. So I do like the slope. And that leaves a little bit more room to the downside, whereas the daily chart has us a little bit more of a critical juncture. So let me just clean this up for you a little bit. Again, I had this 50 on, a 618 retracement on there, which was a nice floor. That ended up being sort of where you opened up the weekly opening range. A break, you're looking for a late week low. It's Thursday. Expect either a low today or tomorrow before some sort of near-term recovery. And again, it all is contingent tomorrow where you can see a scenario, dollar spikes higher and pulls back, and you get some of the recovery that you've been looking at. You know, if you take a segue and just look at gold, for example, we talked about gold coming to that key support region yesterday. Yeah, we sat there, we pushed lower. You know, what the heck do you do with that? I would have wanted this to be a more substantiated break. It's a confluence 38.2 and lower parallel. Now, if you can extend a parallel off the highs that you made from January here, it actually looks like it may have caught the low. So look at this range break here near term where the recovery still needs to clear, you know, 1220 to get bullish. You're still bearish sub 1220. Remember 1280. I don't have anything to really like decorate for you here on the near term, but me and Jamie are both looking at that same level just from the longer term scope of where we are. Remember, for gold, it's a very similar picture as far as where we came out on the weekly chart. We talked about this yesterday as well. and the missing archive. Here's the pullback in on the weekly chart in gold. Outside weekly reversal off resistance last week. Really put the impetus on the pullback. 1193, 1180, 1176, the butter zone. Okay, the butter zone. So it's not going to be a straight shot. Might get some recoil and pullback based on those levels. Still looking for that drop into that key region. And this is why me and Jamie are still saying the same thing. Until we get that drop into this region in gold, you got to respect the potential for dollar to really make that last gasp of breath. It's been very hard for this thing. Again, here's the dollar index. Real quick before we wrap things up. Still holding resistance. See what happens tomorrow in NFPs. And that's my round for the day, guys. That's everything on my menu. Let me know if you have any other questions or trade setups before we close out this session. I will have this archived soon after we're done here. Sarub wants to take a look at silver. I don't know why that was not on my list, but let's take a look. Interesting. So probe below that key support that we talked about yesterday. And it didn't quite get the 50. All right, so you have to respect 1738 now as resistance. I don't even think it's going to get that high. I'd be looking for 1704 as support. It's a 50% retreat. Basically this pocket. I don't like to give you a range typically this big, but heading into the close of the week, NFPs, dollar is going to move, could really jackknife this thing. It's the lower parallel here, Sarub. You know what? No, you didn't, Pooja. Thanks for reminding me. Oh, dear. Yeah, we forgot Aussie dollar. Can't do that. It's a good thing we have 4 minutes. Thanks for that. Sarub, do you get it? Does that make sense? I would be looking for kind of near-term support, irrespective of the fact that it's just the lower parallel here. It's basic trendline support if you connect these 3 reference points. But add to it, this formation has been crazy clear. Crazy clear. Look at the upper parallel catching that high. So on a pullback approach, now that you're back below the 50, you could see spike 1738, but I think you still drop into this zone here. Okay, similar with what it is in gold. You know, you could see a little bit of a rebound here, but we're still looking for that drop towards 1180. Make sense? Yeah, you're more than welcome, man. Thanks for reminding us to take a look at this. That's and let me take one quick extension here. If there is some significance to that level, it would show up. Whoa. So this is 100 off the low, which is off the high, which is very interesting. All right. Yeah. I mean, that's a whole other zone then. Puts extra impetus here on 1703 into 1709. And then again, I'd still obviously keep an eye on that lower parallel, but it might be a decent rebound off this actually. Watch that zone. Okay? Sarub, feel free to take a picture of this. Aussie. Here's what Aussie dollar looks like. So we had, that was 11, 12, 13. Silver was 14. Aussie is 15. Here's what Aussie looks like. Okay, and we did do an Aussie update the day before yesterday, so let's bring that up real quick. Okay, so right on cue. We broke that weekly open, the weekly opening range low. We took out target 75.42. I think we talked about this yesterday during the webinar, and here's the drop down 30, the 38.2 at 75.18. We just took that out, and here's a test of last week's low as resistance. So let me clean this up for you. And I wonder, hey, that's nice. Sort of already the butter zone that Jamie's looking for anyway. Near-term resistance. Again, don't stress this. It's there for reference at this point. Lower parallel wasn't all that clean. He didn't make it to the median line, but basic last week's low, decent pivot, highlights that. Kind of want to see resistance start to teeter out near term. The way I see it, it's probably going to go right back. Could go all the way back to the weekly open, but I'm still looking for that drop into this region. I wish there was a little bit more cleanliness to the decline here on dollar. Aussie dollar. Give me 1 sec, guys. I just need to see what this looks like. Could be some channeling action here. Don't mind that 38.2 right now. You're kind of sailing through that. And you had some mild diverge. I love these. So you could see a near-term recovery. Let's see what the retracement off the high. Too early to rely on this retracement because, again, we just made that rebound, but I do want to see if a basic 38.2 comes in right at the open. Oh, man. All right. So the weekly open comes in right at the 38.2 retracement, dead on. Don't even need to highlight that right now. And we don't need that 236 either. So these are near-term targets, Pooja, I'd be looking at with Aussie. Please zoom out. I need a pic of that. Yeah, sure. Let me zoom out like this. Okay, I know this is clustered here. What I would focus on the upside, if we get that scenario, I don't think Aussie gets up here, Pooja, just for my humble opinion. But if we do, I would focus on the weekly opening range high in the 50. The 786, or the 618 rather, I just leave always as a reference. But this is kind of your, forget about it. This thing is just going to rip. Right now, I'd be interested in seeing if I can fade strength, initially at 75.40. If you get to the weekly open, that might be like a gift. But really, I'm looking for that drop into 74.40, 74.50. This is kind of where actually I would be interested in a more aggressive rebound play. Not looking for any long exposure here in Aussie. I'd be looking for possible long exposure for a dip into this region or possible short re-entry on the short side on a rally into this region. Does that make sense? And again, here it is for you, Pooja zoomed out. Thanks, looking for entering to the shorts. Yeah, I think the immediate idea is you still want to look for that dip towards 74.50, 74.40. That's a big zone. 50% retracement off the low and 100% confluence extension off the high. The only reason, now I remember, the daily chart, we should have looked at this. The only reason, Pooja, let me clean that up, 38.2, but remember we talked about this yesterday. Got a cluster here. 100 and 200-day moving averages giving you a little bit of range of support. Which could offer a little bit of a pause, but yeah, I think we should be looking lower still. Okay, booked 100 pips yesterday. Amen. Thanks to you and Jamie. Well done, Pooja. Love it. Yeah, Aussie's been nice to us. As far as the RBA, it was great because we were looking to short. I was looking for a little bit more of a push higher towards, you know me. I'm always looking to get a little bit that extra pip, but we did grab a nice chunk of it, so can't complain. All right, guys, I'm going to wrap it up here. If there are no other questions, I want to wish everyone an awesome weekend. Best of luck trading tomorrow morning. We'll keep you updated on SB Squawk as far as the non-farm payroll numbers are concerned, and we will be back next week. Remember, Monday is a public webinar on Daily FX where we open it up to the larger public to get a sneak peek of what we do here every day, and then we'll be back on SB Tuesday, Wednesday, and Thursday morning at 8:30 Eastern. Until then, best of luck trading. I'll see you next week. Cheers.